Hello, friends. Welcome to the Momentum podcast by Weekend Investing, the show where we will dive into the world of smart investing and personal finance. Each week, we will invite a guest, and through their lens, we will go through their investing journey, their triumphs and failures, their learnings, and try to implement those in our own investing journey with actionable points. So, let's see what today's guest has to offer. So, hello friends. Let me welcome Mr. Ravi Garg. He's an avid investor. He's been associated with Weekend Investing for a while. We've never, met before. So this is a great opportunity to meet and learn from our investors' journeys. We will be talking about his background, his introduction into the markets, how he started investing, how it evolved, what kind of failures and successes he saw, and what have been his learnings. And we'll go along the way. He's the hero of the day. Let's go. So Ravi ji, welcome to the show. Welcome to the Momentum podcast. And please start from where you are from. What is your background, your career detail, and then how you got into investing.
Okay, thank you, Alok ji. Thank you very much. Okay, so just to start, I come from north part of India. I come from Punjab, Chandigarh, and most of the time I spent into my corporate life. So I have about 30 years of corporate and about 29 and a half years of investing, So I always regret that from my day one in my corporate salary, I didn't start investing. And it was my month six when I started doing that. I always remember. So I worked through all the, like most of the FMCG industries, including GSK, Coca-Cola's companies of the world. And then we
Okay.
moved to Singapore in 2010. The basic objective was about children education. And we were there about good 12 years, 12 and a half, and then we returned back to India. And so right now we are in Ahmedabad, and I was on a short-term assignment, but we love this place so much, and then we never thought of going back to Gurgaon.
Okay.
So that is why we are here from last about 1.5 years, right?
Coming back into your starting of your corporate career and starting of your investing journey,
Yes.
in those days, what was the product that was available, and where did you get the motivation to even start investing? That you need to save and you need to invest.
Absolutely. So it was mid of 1991, and we know that 91, 92, 93, Harshad Mehta's time, the market was really, really bullish. And
Bullish.
always inclined my mind towards investing, how do we grow our capital?
Okay.
But I can tell you, like those days were very, very different. So most of the people who came into the market in last couple of years post-COVID, perhaps they have not seen that those transfer deeds which we used to happen. I put my
Yes.
own club in small town of Punjab, where people used to come in the evening. They used to trade. We used to put a auction there. So it was
Oh,
very,
really?
very different. Yeah,
Okay.
it was nobody in the place called Nabha in Punjab. I was
Yes.
there, and we hired a school in the evening. School was empty, and I
Okay.
met the principal. We said, why don't you give us this place? We will give you
Okay.
a rent. And every
Okay.
Wednesday of the month, we used to meet, and then
So it
starting
was like
from
a
one.
casual. It was like a casual stock exchange,
It was a
informal.
casual stock exchange. We used to say, okay, Adinath Textile 24, 24. Yes, yes. It is exactly the same. So
Wow.
we started in 1991. So that was a journey.
Okay.
But broadly, I can tell you, what do I feel today after 30 years? I think my first 20 years it took me to learn something, right? It was a long time, and I went through that phase, and I see many of my friends and even people today are going through that phase.
Hmm.
So my 20 years of learning, I think what I made my fortune in last 10 years, right? So that is what it happened.
Right.
And I could say that 20 years was like a lost cow. Like
Hmm.
we say, एक गाय जंगल में गुवाची हुई जा रही है. Like a random walk.
Hmm.
So
Hmm.
so there was no strategy. Like you get your uncle's advice and your neighbor, and you say buy
Correct.
this, buy Reliance Petroleum, sell this. So we
I
went
think
through that
I think
phase.
in those days, nobody was keeping track of, whether what investment you made actually did well or not. अगर वो बढ़ गया तो बेच दो, नहीं बढ़ा तो रखे रहने दो. Uh,
Absolutely. I think there was no, even today, look, I see lot many people who investing, they don't know how much return are they getting. They don't know are they beating the market or not. Even today, forget about those days, right? That was a big gap. And but I can tell you, in first 20 years, I did not make any wealth, right? I put all my efforts left, right. You used to make money, for 6 months, and then you used to, or maybe
you
1 year, and then you used to drain out in next 2 months. So it was a
you saw
completely
Arshad Mehta rise, then you saw the dot-com rise, then you saw the
exactly.
2008 crisis.
Yeah, go to these 4 or 5 cycles. I
Huh.
think I think it was important for me.
Yes.
So it made me more wiser, or I learned how do we keep a mind under control by
Hmm.
first 20 years of experience.
Hmm.
So I think it is less to do with what do you know, what you don't know, but it is
Hmm.
more to do with how do you control your temperament. That is what
Yes.
that
Very well.
helps.
Yeah.
Because I generally see, no, let's say the market is common for everybody, right? If the market is generating 13-14% year on year, but
Yes.
somebody's making losses, somebody's making 40%, right? it is
Exactly.
it is all difference about how do you look at it, right? So that was I think that was my biggest learning. So yeah, we went through that phase, and then last 10 years was quite good, in terms of how do we mitigate our risk, how do we diversify across different market, different asset classes.
Wow.
So no regret, but I wish if first 20 years was like last 10 years, so it
Hmm.
could have been it could have been very different. But
Correct.
I'm absolutely happy where I'm today. Right?
Everybody has to go through their own learning curve. Some
Yeah,
people have a learning curve of 5 years, some have 10, some have 20.
that's
Uh,
right.
you know, and some never get through, learning anything. So
That's right.
there
That's
are
right.
many cases. And earlier, when I was in my broking journey, I was interacting with thousands of clients, and I would see senior people, senior citizens, not really having any strategy, just buying what they're seeing on TV and maybe
Yeah,
selling it later on, and not really even keeping track of whether they are making money or not. It was more like passing time for them. That this
absolutely.
activity is helping me pass time rather than making money. So
Rather
from that
than making money,
view,
right?
they were
Yeah, yeah.
doing what was needed.
Even I think the difference in my first 20 years and last 10 years is that first 20 years, I did not have any advisor. I didn't have any mentor. You know,
Hmm.
I always believe that I know it, right? And that
Yeah.
is the biggest pitfall when you don't know about
Biggest
it.
biggest
And
pitfall.
then
Yeah.
you say that I know it, and then you start doing it. Sometime I ask people, look, for everything, even today, you need an advisor. For your
Yes.
yoga classes, you need advisor, right? For your gym, you need an advisor.
Very
When you're
good point.
not well, you go to the doctor. For everything, Alok, you need advisor.
Yeah.
But when we come into the financial journey, and we don't need advisor today, right?
Yes.
People are
Yes.
saying, "Oh, I'm going to do it my own."
It's very
So
surprising, actually. I mean,
yeah,
that for everything else in life, we will take professional help, but for not
but
for investing.
not for, and which is a and this is not a this is not a lesser important part of your life.
What is the most
This is
important?
this is the most important, right?
One of the
But
most
but
important.
still, this is a mindset. Might be a
Yes.
low, might be the reason. Even if somebody says, I need to go to for advice, the first thing, people go to bankers, right? And my experience, they are the biggest crook, right?
Yes. Yes.
Because
Actually, bad
somebody whom
advice has caused the society to sort of have a view that advisors are not good.
exactly. Advisors are not good. And then you go to any private advisors, you go to
Hmm.
an advisor where you have not seen the 3 or 4 cycles of the
Hmm.
market. And then
Hmm.
you start advising. And then after 3 or 4 years, you say, no, it was not a good one. Maybe people had a bad experience. You have got
Yes.
very less number of people into the market
Correct.
who are going to work for you rather than working for themselves.
We were actually a few days back thinking about this, that any advisor who has not seen, let's say, more than 10 or 12 years of the market, and
Exactly.
he's of the age of less than 40 years,
Yeah,
they have not witnessed any bear market, they have not witnessed any major crash in the system. So
absolutely.
anybody who's at the age of 40 or under is actually living in their own world of how markets are. And
That
those
that
who
is
are
right.
above 50 years of age have seen certainly, more troubled times and are more, sort of mentally prepared for those kind of eventualities.
That's right.
Life experience and that is true for investors also. Like your
Yeah,
experience is very rich going from 1991, having seen so many cycles, versus
right.
somebody who may have come in 2021 and not even seen the COVID cycle. So
Yeah.
the experience of the cycle makes a lot of difference in how your behavior is going to be when the market turns against you. Like right now, some people are losing sleep, but there are others who know that this is the part of the game.
Yeah, yeah, absolutely. I don't know. That's right. So no,
So
it
that's
I think it was, yeah, and I think the second part, Alok, which I also think when I said it's all about the mind game, uh, maybe our minds are not trained to deal with the stock market naturally. One is naturally, second, we have not trained ourselves accordingly. Sometime to my friends and my families, especially the children, next generation, I give them an example. Many times you do that. I said, okay, guys, come on. I
hmm,
give you two options, right? First option, for next 30 days, next month, I will give you 10 lakh rupees a day.
hmm,
Very simple. People
hmm,
work 10 lakh into 30, 3
yeah.
crore rupees, right? In second option, I give you 1 rupee on day one. And for next
Hmm.
30 days, I'm going to double. It's very standard, right? It's not anything rocket science about it. But
Correct.
even the literate people, mathematical background,
Can't do.
they
Can't do.
cannot find out what will be after 30 days. And many people will choose first option, right?
Yes,
And
yes. The
and
human
same
mind is not wired to think
mind is
exponentially.
not mind is not wired.
It
So
is wired to think linearly.
absolutely. Our mind exponentially doesn't work, and neither we have trained it. And the stock market is exponential, right?
Exponential.
So it's a
Yes.
it's a completely. I said, okay, I give you same thing I put you a different context. I give
Hmm,
you same 10 lakh rupees every day in option one, but in
hmm,
option two, I give you 100 crore rupees at the end of the year, at the end
hmm,
of the month, 30
hmm,
days.
hmm.
100% people will choose 100 crore, which is
Correct.
exactly same. Even in
Exactly.
first case, it was 110 crore. Right now,
Right.
it's 100 crore. So
Correct.
it's a mind, right? So sometimes I go back. Why do we behave like that? Maybe I
Hmm,
was thinking, when we started our school journey, we go to UKG. We
hmm,
learned one, two, three counting, right? We
hmm,
learned table of
hmm,
two, two is to two, four, two, four is to two, two is to three, six. When we
hmm.
never learn two is to four, four to eight, eight, 16, 32, right? Your mind,
Later.
your mind doesn't work like that. But the
Yeah.
stock market works like this, so
I
yeah,
think the mind also is not trained to think in scale, which is
in
somewhat
scale.
a derivative of the exponential thing that we talked about. But we
Yeah, yeah,
never think that today, if let's say we have 10 lakh rupees
yeah.
and we are doing certain activity in the market, tomorrow, if that grows to 1 crore and then it goes to 5 crore, will we
Yes,
be able to execute the same kind of thought process or the the market intervention that we're doing with larger
yeah,
and larger money, or will the absolute numbers really dwarf our decision making? uh,
absolutely.
that is also because I've seen so many cases of HNI clients who otherwise have significant wealth, but in
Yeah,
stock market they will put very little of it
very
because
little of it. Right.
somehow that is a risky element.
Yeah,
And if they are worth 50 crores, then maybe 2 3 crores is more than enough for stock market.
2 3 crore is more. Absolutely. Yeah,
From that point of view, a lot of the wealth or a lot of the money never comes to the market because it is not being invested structurally. And
yes.
the fear is that we, of course, I mean, they've made this wealth with great hard work, and nobody wants to give up their capital.
Yeah, yeah,
So
yeah,
this thought process in the mind that the markets is very very risky, and the markets is going to take my capital away, and
yeah.
it's geared towards more of speculation than stable growth of capital. That thought process is prevalent in the society, and that is why we have more investments in real estate, we have more
Yes.
investment in gold, we have more
Yeah.
investment in FD than equity
NFT.
even today.
Even insurance. Alok, we have got a more investment.
I mean,
Yes.
that is such a sorry state of affairs. But
Yeah.
I guess the investors will get gradually educated, and it will take significant time for that to happen. And I'm happy to see, the numbers are enlarging very rapidly. We've gone
I
from
think things are changing rapidly.
the first 20 years of your journey. If you were to recall your biggest sort of failure or learning or experience that really changed your mindset, maybe some stock that really went down, or some, you were very confident about certain investment and you kept putting more and more money and it didn't work, or some episode like that. Did anything happen like that which caused you to sort of rethink your approach, that this is not working?
Yeah, my only thing was that I was saying, oh, I'm trying to do everything, but you don't generate wealth, right? So how this idea came when I started tracking my performance with the market, right? I was not able to beat it. So I
Hmm.
was under the impression that I'm beating the market every year, but I was not, right? This was surprising to me. And then I
Hmm.
find, oh, okay, 80% of the funds are not able to beat the market. So
Hmm.
must be 20% of the people must be doing something different, right?
Correct.
So then somebody,
I
my
think this
mentor,
this issue is there with a lot of investors who look at some winners in their
yes,
portfolio and feel that they are doing well.
that's
Whereas
right.
overall, if they were to calculate and do an XIRR of when, at what stages did what capital come in, will they
Yes.
really find out whether they are underwater or above the benchmark performance? But
Exactly. Classical example is, for example, ITC. People are holding this stock from last many, many years. People
hmm,
are generally thinking, they are beating the market significantly. And you sit
hmm.
with them and see the numbers from year to year.
Yeah,
Numbers
sometimes
looks like number looks like sometimes it could be very different. So that
correct.
was, I think, the turning point in my thing. How do we, when I was in Singapore,
Hmm.
so I met a lot of investors, private
Okay.
equity. So
Okay.
what private equity people are doing, what mutual fund guys are doing, what fund managers are doing for their own. So there are a lot of learnings. So like if you ask me, I would like to put I call it my ETCS model. TCS is everybody knows. ETCS. I will come into E part later on, but the
Okay.
T, everybody knows that time. The
Okay.
money is, you are not going to generate money, overnight. You need to have a patience. You need to have a time, right? So second, my C, I always say you need to have a corpus.
Okay.
Even if you do right thing, if you start with rupee 1 or rupee 100, you are not going to generate money after 20 years. You need to
Correct.
have an adequate corpus, right? So
Was to
number
start.
three was where most of the people are lacking about the strategy, right?
Strategy.
People
Yeah.
know, they're not clear about strategy. They don't have any mentor. So like
Hmm.
you open any TV channel, you will find hundreds of the people giving you a tip.
Yeah.
You buy this share, buy this share. Tell me how many people are there who are telling you to sell this share? I
Hmm.
think very, very less number of people. So you
Yeah.
have got a entry clear, or that is clear, not clear, but at least you have got an idea, but
Correct.
you are not clear when do you exit out of it, right? And what should be your position.
Correct.
So, and number four, I saw that I used to fall in love with my stocks, right? In
Hmm.
first 20 years. And once
Hmm.
you start fall in love, you never get out of it, right? Believe me, Alok, today, after 30 years, if my portfolio has got about 70 stocks, I think
Hmm.
I don't know more than four or five. Believe me, stocks I'm holding. So
Hmm.
doesn't matter if there is a strategy behind it. So
Right.
automatically these stocks will get out of it. And
Fantastic.
last part, E, which I said, is the emotions. I
Okay.
think that is the game, right?
Hmm.
Your advisor not only tells you where to invest, when to invest, but he
Hmm.
helps you to control your emotions, right?
Hmm.
So, and especially when we manage our own wealth, we
Hmm.
destroy our wealth due to emotions, right? When you
Yes.
get
Yes.
somebody else who is supporting you, so maybe
Correct.
when your train is off track, he brings you the train your track, right?
Correct.
So,
I mean,
uh,
this
so
was a classic analogy in this Munna Bhai movie also, when the doctor says, if I have to operate my own daughter, my hands will
yes,
start shaking. But if I
exactly.
give advice to others or operate on others, I'll be fine. So,
I will be fine, right? So today I'm helping people, sharing my experiences, but I also have advisors with me, so that I don't get drift away. So that is what I think, it worked for me.
hmm, hmm. And if I were to talk about the style of investing. So earlier, obviously, you were more in conventional style of investing, where you were trying to buy stocks that were at lows, buying value peaks and things like that.
Yeah,
And then now you have graduated somewhat into momentum investing also. So
that's
in
right.
that thought process, how did you bring about that change of thinking that you can buy stocks which are not at lows, which are running away? It's a very non-intuitive format
Non-intuitive
kind
thing.
of
Yeah,
investing. It takes time to
yeah,
and time and courage
that's
to do
right.
that. It's simple, but
Yeah.
it is not easy
Yeah,
uh,
yeah, yeah. So
initially.
again, same thing. We are always being taught that buy low, sell high, right?
Mm,
But
mm,
this momentum strategy is completely reverse of it.
correct.
So but once you see the data points over a longer period, you analyze data, you say, oh, something is working, which
Mm,
is against your value system, right? So might be
right.
you have to go back and might be question your own values, whether was it taught to you, was it right, was it not?
Mm,
So I
mm,
think slowly it changes your mind. And then
right.
also it helps you look, by the time when you cover first part of your journey, we have got a certain wealth. Okay,
Mm.
you don't lose,
Yeah.
your night sleep, even you lose
Correct.
30-40% of it, because
Correct.
like it's fine with you, it's a part of your life. You can
Part of
take a bigger risk in your life, and do that. But
yes.
ultimately it works. I had seen momentum, it works. It's not
Mm,
only in India, but even in US, even in emerging markets.
sure.
So I try to diversify my risk across globally, across different markets. So it's
Nice.
working. Yeah, it's working. It's working well. No regret.
And do you
Yeah.
also do some asset allocation? So beyond equity, do you think of, maybe some real
Yeah.
estate or bonds or gold or something like
Yes.
that?
I tell you, when I started my journey of doing it a more scientific way, so real estate was almost 90% of my total assets.
Okay.
And my target was to keep it, bring it to 40%, but
Hmm.
you can't do it overnight.
Yeah,
But
yeah, yeah. Yes.
today, when we are talking, it is about 47. So,
Oh,
so,
very
no-
nice.
so not too bad, right? Not too bad.
Correct.
So I try to do Indian equities,
Hmm.
and then I have got a US equities, and then I have also have a emerging markets as a part of my portfolio.
Okay.
Uh, I also have cryptos, but that would be hardly 3 or 4%
Okay.
of my, because I say, oh, even up to 5%, even if I lose, it's a
That's a
fine
good
with me.
good way to allocate. You have
Yeah.
allocated 4%
That's
to
right.
crypto.
I don't do anything in gold. That is what my,
Okay.
like there are a lot of data in favor of gold. I know, Alok, you are a big supporter of gold. So, but
Hmm.
my chat GPT is not able to digest that.
Okay.
I always believe that you are investing into gold because you
Hmm.
want to hedge your currency risk, right?
Hmm.
Historically, people have only gold, but now
Hmm.
there are more structured products available where you can, where you, what do you want, you can invest and you can do a currency. But might
Hmm.
be, who knows, maybe 3 years later, 2 years later, I start investing into gold. So that is
Hmm.
the one area where I'm not very good at.
No worries. So I think we are coming now close to the end of this nice chat. So at the end, would you like to sort of, give your comments or insights to newer investors so that they don't take 20 years to, go through the learning curve, and in fact piggyback on your learning curve, so that they can, achieve a more balanced investing view much earlier than most of us did.
Yeah, I would be absolutely happy to do that. So my key message, Alokji, to all the new investors is that in next 5 or 10 years, I think enormous wealth is going to be generated. You know,
Hmm.
mainly in India or some other countries around that. The few reasons, for example, we had investors about 2-3 crore before COVID, and we had about 11 crore. Huge amount of people are entering into the market, and most of them, those are young people.
Hmm.
And see about, when we talked about totally about 5% of our total savings goes to equity, but
Yeah.
when you find the young people, I find not anybody not less than 30 to 50%. you
Hmm.
know so these
Hmm.
people are saving, these people are engine for growth, and as
Yes.
a part of inheritance, when it's getting transformed, even if say
Mm,
1 or 2% of India investment, which is about 20-25 trillion dollar,
mm,
40-50% is going to go into the market.
Correct.
even let us not take 40%. I'm saying even 5% of it is going into the market, it is going
Yes.
to be enormous, you know. So
Very good
people
point.
need to, yeah.
Yeah.
So India is going to behave like that, which behaved in last 30 years. You know, you had a crisis like Indira Gandhi murder, Rajiv Gandhi, you have got a Harshad Mehta, you had got a dot
Yeah. Yeah.
com, you had got a, everything happened. But despite still India gave about 14-15%, right? So it
Yeah.
is going to happen. I think it's a noise to me. We should not get disturbed by this noise, right? I think
Hmm.
number two, I would say get some advisors which you believe you have got a confidence, right? You
Yes.
trust that person, right?
Hmm.
And I also say, okay, somebody says, I want to have a fun in my life. I said, okay, keep it 15%, keep it 20%, keep it 25%. Do that, play your game, but
Correct.
balance 80% through your advisors, right? Because
Right.
I'm
Right.
not sure that advisor will be 100% successful, but
Correct.
most likely they will do a better job than you because one, you don't have a capability. Number two, you
Correct.
don't have a time. And then your
Correct.
emotion will not be there, right? And number three, overnight, let us forget about last 5 years. You know, you pick
Hmm.
anything, it is going to give you 30-40%. Let us be
Hmm.
realistic. You have to
Yeah.
go to the reversion to mean, right? 14-15% expectations. And
Correct.
then your strategy should be very, very clear. You know, you pick up momentum strategy, you pick up any other strategy that is, you know, that is what your belief, which you believe. But I think momentum is working very well for many people and it's very tested and tried model. And I was very happy, Alokji, you know, like associating with you last, I think, 4 or 5 years. So it is not only how much money you make, but
Hmm.
it is the level of trust, what you know, what you say, I have got a full trust in you. And you
Hmm.
will never give a something like biased approach. You
Sure.
will be very factual in giving a data. You don't promise anything to moon, but you say nothing is in my control, but still I'm going to put my efforts, you know, to generate more wealth for you.
Sure.
So be cool, follow ETCS model, right?
That's a great model.
And
I'll certainly elaborate on that in some video of mine.
okay, that will be nice. So happy to talk to you, Alok. Thank you very much for your
Thank
time.
thank you so much for your time, and I hope the viewers will take a lot of learnings from your journey. And we wish you all the best for the future in your investing journey. I hope you will succeed even more, and do great in your investments. Thank you so much, Raviji.
Thank you.
Thank you for tuning in to another episode of the Momentum Podcast. I hope you found today's discussion to be insightful and inspiring. If you enjoyed this episode, please do hit the subscribe button and share this video with your friends and family. If you are a veteran weekend investor and you would like to be on this show, please fill the form below and our team will connect with you. As always, let's keep learning from one another and we will see you in the next episode. Till then, take care. Bye bye.